hey, if there's a broker in an area that is sending you deals, respond back to every one of their emails. Say, hey, thank you for sending this to me. I really appreciate it. This is a little bit higher price or lower price than I'm looking for. It's not quite size or quite area. Continue to provide them feedback, because I can guarantee you these brokers send out emails to hundreds and hundreds of people with very little response. But if you're there trying to communicate with them, build a relationship, they're going to think of you when the next deal comes along. And by giving them some of that feedback, they're going to know exactly what you're looking for.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, our sponsor for the show today is Pine Financial Group, the leader in hard money lending in Colorado and Minnesota. And they were recently approved to offer their investment publicly. This investment offer is only for investors in Colorado and Minnesota and is only made through their investment prospectus. Get your copy today. Simply visit www.pineinvestments.com and click to get started. Look, there's a reason why some of the wealthiest people in history invest in loans backed by real estate. Learn more about the risks and returns at www.pineinvestments.com. Hey, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me today, I've got Drew Whitson. Drew, how are you doing today?
Good, Todd. Thank you for having me.
Awesome. So, Drew, we met, I don't know, maybe a year or so ago, and Drew's actually basically my neighbor. His kids are in the same grade as well, two of his kids are in the same grade as my daughter. They bike to school together quite a bit with the neighborhood biker gang, so that's pretty cool.
Yeah.
And then your son is a grade older than my son, so pretty cool. And we, I don't know, we've been in the same neighborhood for a while and hadn't met each other until fairly recently. So
yeah.
I wanted to bring Drew on to just talk about, basically his business and what he's got going on. So Drew, why don't you tell our listeners a little bit about what you've got going on in real estate and everything else that you have that you're doing?
Sure. Yeah. So thanks, Todd. Really excited to be here. So on the real estate side, I started out like a lot of people in single family home markets, and later moved on into multifamily, doing smaller 3-4 units, and started partnering up to do some bigger deals. And eventually I ran out of money and sort of came across the ideas of syndication, and have been sort of working on syndication deals for the past couple of years, both here locally in the Twin Cities, as well as Memphis, Little Rock, closed a deal in Atlanta earlier this year as well. So all told, I'm probably at, 700 or 800 units in 4 or 5 states, most of those through a syndication model. I also, in addition to that, work as a full-time professor of finance at Bethel University here in St. Paul. It's my wife and my alma mater. And after I was able to quit my job doing real estate, about a year and a half ago, I realized that I wanted to trying to decide what I want to do with my life. And as a real estate investor and syndicator, it's not a full-time job. And so I wanted to do something else in my life. And Bethel came knocking. And so for the last year, I've been here as a full-time faculty member teaching upper class finance courses.
So what did you do prior to quitting your job for real estate?
Sure. So I was in corporate finance. I got my MBA from one of the University of Minnesota here in Minneapolis, and I spent about 10 years with Target Corporation doing various financial corporate finance roles, planning, forecasting, strategy work. And so really kind of worked my way across sort of Target's financial pyramid, and really enjoyed sort of the chance to be there. I was right in downtown Minneapolis. It was a great organization to be, but just had too many other opportunities in real estate that I wanted to capitalize on. And in addition to sort of the real estate, I also do some coaching and consulting work in real estate. So I have coached, like you, Todd, I have coaching students across the country and who are, getting their own deals done and sort of executing a plan to do syndication and growing their portfolio and becoming sort of financially free one deal at a time.
Awesome. Cool. So you quit your job and then you decided to go get a job.
Yes.
Explain that to me. Because most people are like, I quit my job. This is the greatest thing ever. And I'm never going to work for anybody ever again. But
yes,
you quit your job, you're doing the syndication, you're doing well. And then you go, hey, I'm going to go get a job.
Yeah, exactly. Yeah. So I left my job at my corporate job, my W-2 job in early 2018, focused on a tremendous amount of deals that happened in 2018. We had several 1031 exchanges. We bought into some deals new into the Memphis market. We closed some big deals here in the Twin Cities and started really being deliberate about managing my portfolio. So, while I had the chance to kind of have my own time, I had the resources to, not have a job. I think there's part of me that said, what is it that I want to do to serve in the world? I mean, I like investing. I like making money. I like helping other people invest in real estate. But there was a sense that I wanted to contribute and contribute meaningfully in a different way besides just doing real estate. And so, I took a job working, at Bethel as a professor for a couple reasons. One was I really enjoyed. I had a great experience as a student here and had a lot of people that invested time and energy into me to help me be successful where I am today. And so I wanted another way to invest in other people. And this was one of those avenues. I really love finance. I really love the finance track and sort of teaching financial modeling, valuations, managerial finance strategies. I have a lot of things that I can do to bring from my professional experience in the corporate world and professional experience in the real estate world into the classroom. And frankly, it was a job that really complements my real estate investing. I had a great chance as a professor. They want you to be doing professional development. Well, they love hearing that I'm sort of structuring private equity deals. And at the same time, I could take those kind of experiences and bring them into the classroom. And I have my summers off in order to pursue more real estate deals and have more time with my family. So I sort of get to have my cake and eat it too with this job. I have two sort of great, complementary career paths, both of which are very, very flexible. And that's why a lot of people don't want to have another job, is they want the flexibility. And with my role as teaching, I have a tremendous amount of flexibility. And unlike my previous employers, where I sort of didn't want to talk readily about my side hustles and my real estate work, they're very eager to have me continue to do that. They're very supportive of me, presenting at conferences, doing speaking engagements, and really promoting the kind of things that I do associated with their brand and in the classroom.
So what did it take to become a college professor? Did you have to go back to school? Did you have to do anything, or what did it take?
Yeah, I mean, certainly in the business department, you need at least an MBA is the minimum requirement to teach. You have to have pretty good financial resources, because I tell you, they don't pay very much here. It is a privileged life and it's a great time, but it is not at a small private Christian university. You're not getting much of a paycheck. So you have to want to be there. And I think the third thing you really need to provide is a significant amount of real experience that complements the discipline that you support. And so my real estate work, my corporate finance at Target, I even started my career, in a small investment bank over in St. Paul. Those my history aligns really well to the kind of classes that they want me to teach. And I think you just kind of gotta raise your hand and say you're interested in doing it. There's few opportunities for this kind of to come along. And I had been sort of a friend and connection with Bethel after I graduated for a long time, but that sort of helped me position myself well, so when the opportunity came up, I could be part of the candidate pool. So
tell me now, with your real estate, you said you started out doing smaller deals. What what was that transition? Like, why did you go from, smaller deals to now you're syndicating large multifamily deals? What was that transition like? And then what was that decision? Why did you do it?
Yeah, sure. Well, I had built up a small portfolio of single family homes, and while I really enjoyed doing that, I felt like I didn't have enough capacity to do more. I was managing them myself, dealing with tenants, working with contract providers, and I knew there was people that had scaled much bigger than that. And really the trick for me, really the exciting part with doing multifamily was that I could get professional property managers who could take on the responsibility of all these things that sucked up my time. And for me, it was an opportunity to trade my time of managing assets, pass it off to people who are really good at it, who really know exactly how to manage tenants and comply with tenant laws and work with vendors, and trade that time off for finding better and newer deals, finding partners on deals. And so it was a way to scale very quickly, where I could focus on acquiring high quality cash producing assets at attractive prices, and then allow people who are professional property managers to take care of that for me and provide that kind of advice that really allowed me to scale. I think the bulb really went off as my first two deals was a 3-plex. I did a 4-plex. And then we did, my partner and I, we did a 32 unit. And the realization we had was that our 32 unit was as much, if not less work than the 3 and 4 unit. We had a commercial loan. We had a property manager who walked the property with us and knew exactly what the tenant base and what the property needed. And the lender was more interested in the underwriting the 32 unit than they were underwriting me. Like, they wanted to know I knew what I was doing, but the lender really was interested in the 32 units performance rather than what Wells Fargo wanted to know about me on my 4-plex, right? And so the focus shifted to the asset. It was a smoother deal. It was much easier. And so the bigger the asset got, in some ways it kind of got easier. You could scale very, very quickly. And after that 32 unit was when we realized, let's keep doing this. Let's go bigger. Let's find more deals, and leveraging, people and investors in order to, build a portfolio. And that's just what we've been doing.
Cool. Now, talk to us a little bit about that scaling process and maybe what it took to do that. What are some tips that you can give our listeners to help them be able to scale? Because obviously you've done it without full time. I mean, you're doing some coaching and you're teaching, and you're also scaling your real estate. So what are you doing to make it work?
Yeah, exactly. So here's my suggestions would be. As you have the opportunity, and if you have the capital and the time, I think there's 3 different paths that you can go towards in order to kind of get to the larger syndication deals. One is do some things on your own. Find a duplex, find a 4-plex, buy some things on your own account where you can make mistakes. You can work on your own timing. You don't have to worry about investors, right? Find some things you can do on your own to build your balance sheet, gain some experience. Number 2, passively invest in other people's deals. Find ways to sort of passively participate in larger syndicators' deals in order just to kind of follow along. What does the underwriting process look like? What does their marketing packet look like? Once you purchase it, what do the investor relation components look like? So start to buy into some deals that get you some experience in how these things are structured and put together and managed. And it gives you a right as a passive owner to ask questions of the general partners and ask questions of the ownership entity to kind of learn how it works. And then really sort of, I think, 3 would be help other people do deals. Find ways to, partner with people, help them raise money, help them put in some of the risk capital on a deal. So find ways to help add value to the people that are putting deals together. And then finally, after you've been able to kind of go through those first, 3 steps, I think you're really well equipped to be able to start doing deals on your own, to sort of be the lead syndicator, be on the general partnership, because you've built some experience, you've passively invested, and you've helped other people put deals together. And so I think that's a real natural progression in this business that gets you the balance sheet, it gets you the experience, and it gets you sort of the kind of credibility that when you're ready to do this on your own, you can address and be comfortable talking with investors, and talking with lenders, and talking with property managers, and talking with brokers about what the things that you've done in preparation for leading and executing your own deals.
Yeah, no, great tips there, and quite a few things that, or a couple things that I really wish I would have done earlier on, and I didn't even, quite frankly, know. And a lot of people didn't know. Podcasts now educate people so much more, and just I think there's just a lot more education out there. But I had no clue you could passively invest in other people's apartment deals. I had no clue you could help raise money for other people's deals without taking the risk on yourself of doing your own deal. It would have been great to know that at a younger age. It would have been a lot easier to scale at an earlier phase in your kind of learning curve. So it helps you get to that space a lot quicker where you can now do deals on your own.
Yes.
For sure.
Absolutely.
Sure. Cool. So what's a big, let's go through a mistake that you've made, maybe a bigger mistake that you've made, and how have you learned from that mistake?
Sure. I think one of the mistakes that I made early on was that I was buying deals only for the appreciation. Like I bought some deals to say, look, I just think this is undervalued. And I sort of failed to really take into account the ability for properties to cash flow, right? And that the valuation of any property is its ability to create cash. Buying a property only for the intent of refinancing it in 3 or 4 years, I think is a really big bet. I think that has some risk characteristics that are appropriate or part of your portfolio with some of your investors. And so I wasn't buying properties for cash flow. And I think that there's been I think had I have done that right out of the gate, I would have made different decisions on the acquisition. I would have made different decisions on how much capital we thought we needed right out of the gate, instead of sort of constantly scrambling, having properties that didn't produce cash, having to write checks into the deal. I think that was one of my mistakes. So I think I've really evolved in wanting to have a really healthy balance in my deals of finding things that can produce cash in the first year, as well as having some value add components to them. So I'm getting some appreciation and I'm getting some cash flow, but the deal is not contingent upon what's going to happen in 4 or 5 years. The deal is partially creates value because it puts out cash in the first 6 to 9 months that you own it. And I think it also makes you accountable to your investors as well. If I tell my investors I'm going to produce cash in the first 6 months of my deal, I better be able to do that. But if I say, hey, we're going to refinance in 3 or 4 years, there's no metric for them to measure whether that's happening or how to gauge the risk of the deal. So that's my first thing, is really move into buy properties that produce cash right out of the gate. Yeah,
I think that's amazing advice right now. So many people aren't doing that. I see a lot of deals that it has to appreciate. The market has to continue to go up in order for the deal to work. And that can be dangerous. I mean, having value add is one thing, but you want to be able to have cash flow. And creating that extra value is great. But if you can't cash flow, it's not worth doing the deal, especially fairly early on. You should be able to start to cash flow. The other thing that you said is not having enough cash on hand, and I think that's extremely important. I've definitely learned that lesson several times. It's very easy to underestimate how much cash you need, and then, as you said, you're scrambling to be able to find the money after the deal's already in place and running, and you're looking for a little bit more money to continue the deal. And that's never a good situation.
Yep, absolutely.
We don't know how long this cycle is going to last. I mean, it could be another 8 to 10 years, but it could also be another, year or maybe even less. And if you're stuck in a situation where you've got no cash flow and you've got a lack of cash, period, then you're going to be in a very bad position if the economy does take a turn. So,
correct.
Hey, let's take a minute to thank our sponsor, Pine Financial Group. Look, you work hard for your money. Is your money working hard for you? Because of inflation, money sitting idle erodes your wealth. Many investors understand that real estate is a great investment, but may not want the effort or the risk that comes with owning their own property. They want to sit back and have payments, hit their bank account each and every month. Stop eroding your wealth and start building it by asking your money to work for you. You should be earning profits while you sleep, an investment backed by real estate. Pine Financial Group, the leader in hard money lending in Colorado and Minnesota, was recently approved to offer their investment publicly. This investment offer is only for investors in Colorado and Minnesota and is only made through the investment prospectus. Get your copy today. Simply visit www.pineinvestments.com and click to get started. There's a reason why some of the wealthiest people in history invest in loans backed by real estate. Learn more about the risks and returns at www.pineinvestments.com. It's www.pineinvestments.com. I want to invite you to join us at the North Star Real Estate Conference. This conference is September 20 and 21st in Minneapolis, and it's going to be packed full of a ton of great speakers. We've got just a great group of people speaking. You can look at our lineup on our website, nreconference.com, and sign up there as well. We've got an early bird special. All you need to do is type in early bird, one word, and you can get $100 off. And that's good through August 10th. So make sure you sign up now. Take action. Look, people that take action and value their education are those who are going to succeed. I know there's a lot of free content. My podcast is free. There's all kinds of free content out there, and maybe even free meetups that you're attending. But this conference is going to blow your socks off. This is going to be well worth the price, and all the profits go to charity. So it's definitely time to take action. Sign up now. Don't delay, because the prices will go up. But you know what? Every time I attend a conference, I 10x. Actually, I would say I more like 1,000x even my investment, 100, 1,000, potentially even more X my investment. I've met so many fantastic people. I've met investors at conferences. I've met potential partners at conference. I've joined mastermind groups because of conferences. So it's a ton of value. You cannot replace it. So check it out, nreconference.com. Thanks a lot. So for somebody who's trying to get to that next level, trying to either get to where you're at or maybe just even get started, what are some things it takes to get there? I mean, you've already kind of covered some things in scaling up, but what does it just take to get to that next level?
Sure. Well, I think one of the advice that I give people who are sort of dabble on the fringes of this industry is that there is no substitute for just taking action. I've met a lot of people who've read every real estate book that exists. They listen to hundreds of hours of podcasts, and that's great to do. But taking action is where you are going to learn things. When you take action and you do something, that is when your learning curve and your retention goes up absolutely dramatically. So you are better off not reading your 11th real estate book, but spending 2 or 3 hours driving around, talking to brokers, talking to lenders, networking, getting in front of people to tell them your story, to be able to articulate what it is that you want out of a real estate deal. And so that would be my encouragement is, take action, do actual things besides just absorbing information, take action to execute and learn. And that is where you are going to, really grow in your ability to understand deals, put them together, be able to raise capital to kind of get you to that next level, is engaging in those actions that lead doing certain things, to leading that, to getting deals done.
So when is it too early to take action though? Because we all know people who maybe take action potentially too early, right? And they maybe make a fool out of themselves or whatever. Right? They take action too aggressive, too early. When is too early? How do you know you're ready to take action?
Great question. Well, I think there's a couple things. I think if you're sort of all by yourself doing this, that's probably a good sign, right? I think you probably want to find some partners, some people who are experienced in the industry. There's a lot of really great mentorship programs out there that can provide you coaches. If you have the capital and you have the money to do that, hire a coach, hire someone who can come in and help guide you and help you understand and help you not sort of embarrass yourself. But finding partners at real estate meetup events, getting to meet people in person, I think is going to be the first thing. Listen more than you ask questions, or listen more than you speak, I guess would be the kind of term. Really just try to absorb, what people are telling you. Find the people that you sort of want to emulate and have a career path or have a real estate path, and ask them how you can help them, how you can help their business. And they're happy to bring you along, and they're happy to sort of share their information. So finding the right key mentors and partners in this business to sort of help guide you towards what's the right action to do would also be a really good strategic idea.
Cool. Awesome. What's maybe a daily or weekly habit that you do that leads to your success?
Yeah. This is while we spend all our deals are analyzed as a math problem. It's how many dollars come in versus how many dollars come out. I mean, that's the math of what real estate investing is. But the core of it is it's a relationship business. It's a business that's built on trust. It's a business that's built on familiarity, with common goals and alignment. And so one of the things that I'm always trying to do is spend time personally connecting with the people in my network that can provide me, that I can help and that they can help me. And whether it's the bankers that I want to sit down and talk to just to find out what kind of deals they're doing, how do I understand what they're working on, and how might what their bank does be a good fit for my business, whether it's the brokers that I want to be able to constantly be working with, whether it's my investors or other partners. You can't sit in front of a computer all day just looking at numbers. You have to get out and meet people. You have to develop those relationships, and you have to be intentional because there's a lot of people clamoring for attention. There's only so many deals out there. And so one of the things that I tell some of my coaching students is, hey, if there's a broker in an area that is sending you deals, respond back to every one of their emails. Say, hey, thank you for sending this to me. I really appreciate it. This is a little bit higher price or lower price than I'm looking for. It's not quite size or quite area. Continue to provide them feedback because I can guarantee you these brokers send out emails to hundreds and hundreds of people with very little response. But if you're there trying to communicate with them, build a relationship, they're going to think of you when the next deal comes along. And by giving them some of that feedback, they're going to know exactly what you're looking for. They don't have to sort of guess. So just be intentional about connecting with people and building that relationship.
Yeah, and I really like that. I was at a real estate event I was speaking at, and somebody was asking me that, like, well, you're buying these properties out of state. Why do you think you can get these properties that people that are in that market, why can you get them and they can't? And I said, well, quite frankly, they have every opportunity to get them. They probably have a better opportunity than I do. But the thing that I do differently oftentimes is I actually intentionally build relationships, and I intentionally stay on top of those relationships. A lot of people, whether they're in the market or out of the market, they're not spending that time on building those relationships. There's only a handful of people that actually keep that relationship being built with that broker, that respond to the emails that are sent to them, that call them and thank them, that are weekly or bi-weekly or, whatever, even monthly communicating with those brokers. So that's probably number one, is you just being intentional about you are trying to find deals, and these brokers, like you said, they send out hundreds of emails, but they get just a couple people responding. And even though it's a busy market right now in multifamily, it's still a pretty small world. It's still a pretty small amount of people that are truly doing the deals in the markets. And if you can stand out and be one of them, you're going to have every opportunity to get some of the better deals that are on the market. And there's quite frankly, there's just not a lot out there. So you've got to work even more diligently at building those relationships.
Exactly. I mean, just to reference, so your listeners know you and I closed a deal together as partners in mid-May. And the reason that deal came about was for the exact reason you just said. It was in Memphis, Tennessee. I'm not from Memphis. I live in St. Paul, our area. But I was there in person because I was trying to connect with our property manager in person. I just wanted to connect them in person and see what they're working on. Yeah. And it was because I was sitting at the table with them when we said, hey, we're looking to acquire something else here in this market. They kind of raised their eyebrows and said, well, there is this totally off-market deal that we're working on that we would be interested in, seeing if this would be a good fit for you guys. And if I hadn't spent time developing trust and a good relationship with that property manager on the deals that I already owned, he wouldn't have wanted to give me another deal, right? If I hadn't been there in person trying to, build that relationship and understand what's happening in the market and really wanting to partner with them to be strategic about being successful, to work with their firm and to work with their market, that wouldn't have happened either. And so that purely came about. That was a purely off-market deal that was sort of handed to us because we'd established all those pieces of trust that knew that when they brought this to us, they could put their reputation on the line for us as buyers, and they knew that we could partner with them to execute a great strategy that was good for our investors and good for the community.
Well, and talk about relationship building. I mean, the only reason that then I even saw the deal was because of the relationships that you and I had built as well. And with that deal now, we'll open up the doors to doing a lot more deals potentially in that market or other markets surrounding it with those brokers involved, and even other brokers that have seen that we closed on a deal. So, and a sizable deal at that.
Yeah, it is stunning at even in these like major markets where, hundreds of millions of dollars gets traded hands, that is controlled by probably a half dozen primary people that operate in the market.
Yeah.
And because we built relationships with them, I have them on speed dial and they'll take my calls. And if we say we're interested in something, they'll be an advocate for us because we performed in that market. So it's really important for us to maintain that reputation and that relationship in those areas.
Yeah, absolutely. Cool. So Drew, where do you see yourself taking this business in the next, let's call it 5 or 10 years? Where do you want to grow? Do you want to maintain? How are you, what's your outlook?
Yeah. Great question.
Maybe you don't know.
I mean, I think there's 3 things that I'm really that are my goals for the next 5 years. I think one is I want to preserve the work that I've created. I really want to be very careful about managing the existing assets that I already own, making sure that we're managing those really well. I don't want to get too excited about doing more deals, but ignore the existing portfolio that I have. I really want to make sure I maintain the wealth and the income, and really be looking out for my investors who have already put their trust with me.
Super important. And I appreciate you mentioning that, because there's so many people out there that have these big audacious goals, and you hope that they're focusing on their current portfolio. As you said, your current investors, you want to make sure you're taking care of them first and foremost.
Yeah. I mean, you hear a lot about getting deals done. You don't hear a lot about how do you thoughtfully manage the asset? How do you thoughtfully work with your investors? How do you thoughtfully work with property managers to execute capital improvement plans? And so just because you got the deal done doesn't mean you're sort of set to go and the checks roll in.
Yeah.
Right? There's a lot of work to do. So number one is making sure I'm keeping my investors and my portfolio healthy, making sure it's well capitalized. I think two is so that's number one. I think number two is figure out ways to grow very strategically, because there was a point in time where I was willing to look at any market with any asset and sort of just kind of wherever growth can happen. I think number two in the next 5 years is, where do I have partners and existing assets that complement really well to what I already own? Right?
Mm-hmm.
I'm really interested in Memphis and Little Rock and St. Louis and Birmingham because I know the partners and the players in that area. There's other fantastic markets, Salt Lake City, Boise, Phoenix. I'm just not as well established there. And so it is to my benefit and my investors' benefit that it's very efficient to expand my portfolio in ways that are adjacent to what I already own. I can move quicker. I have a higher level of confidence. I think it's in better interest for my investors. So I think I want to be very strategic about, number two is kind of where do I expand that is strategic. And I think number three, it's continue to find ways to not just make money for myself and make money for my investors, but how do I really impact the communities that I am involved in? I mean, it is an honor to own hundreds of units in the Memphis market, but I want to point not just towards did I make money in that market, but is the community, are my tenants better off? Is the neighborhood better off? Is the city, to the extent that I have an ability to influence those areas, what am I doing strategically to be good partners to the community? So I think that's the third thing is, how do I find ways to sort of do good for myself and my investors, but also do good for my own personal community and the communities that I invest in. And to that extent, I think that's good long-term business as well.
Yeah, absolutely. And I think that's why I get along with you very well, is because these three things that you just mentioned are very, very important to me as well. And that just speaks to, I think, who you are. You're trying to find ways to impact others in the community, and that's just super important, at least in my opinion. So,
yep.
Good for you. A couple questions before we wrap up. What's your favorite book, business related or real estate book?
Business related. Well, you've probably had all the sort of the classic ones on your podcast. So I'll throw something maybe you haven't had before. There is a book I read called Against the Gods. And it is a book about the history of risk management. So it's a little bit of history, it's a little bit of math, but it's called The Story of Risk. It's called Against the Gods. And it kind of goes back to the premise that a lot of our ability for Western civilization to expand has been predicated on our ability to understand and manage risk. And how did mathematics contribute to that? So it's a really neat story that I've thought back a lot, that this business is about understanding and managing risk. And so to the extent that book sort of shows where the history of that has come, like how did insurance come about? How did the Pilgrims came about to America literally based on a private equity investment. Like it was literally a private equity structure that they had, they came to. So these kinds of advancements in human history have been predicated on these, the ideas. So this book sort of promulgates these ideas around how do we thoughtfully think and assess risk. So I think that is the premise for what we do here in real estate, and hopefully maybe that's one your listeners haven't heard before.
Cool. I have never heard of it before, so definitely good. Last question before we wrap up. What are your 3 pillars of wealth creation?
Sure. 3 pillars of wealth creation. I would say 1, know the facts. And by that, I mean, whether you are a college student with huge amounts of debt, whether you're an advanced real estate person, know what your balance sheet is. Like, take the time to go through and think about your life, not through an income statement, but through a balance sheet. What are the things that you own? What are the things that you owe? It really helps you sort of lay out a trajectory. If you want to build wealth, not just income, but build wealth, know the facts of your life. And it's amazing to me how few people have gone through the exercise of truly being honest about their balance sheet. And what does that mean? Because once you lay out those facts, there's a lot of things you can do with your balance sheet, ways you can make it better, ways that you can leverage it to grow, things that you might not even be aware of. So one, know the facts of your current financial situation. And only by doing that do you have a metric for which you can grow and build additional wealth. Two, find ways to scale by allowing others to do things that they're really good at. I learned this very early on in doing single family homes. I was spending time painting, and I was spending time, doing this and that. And I was doing it because it was cheaper than paying someone to do it, but it wasn't the best use of my time. And so it wasn't until I allowed other people to do maintenance for me, even though it was expensive. They could do it better. They could do it faster. I hired an accountant. I hired an attorney. I hired a handyman. I hired a property management firm. And so allowing the ability for your business to scale is contingent upon you letting go of a lot of these pieces so it can free up your time. And I know a lot of investors who own a handful of duplexes, but they're never going to expand because they don't have any time. They're too busy saving money, doing things themselves, right? Yep. So I'd say that's probably number two, is allow some scale. And I think number three is find ways to, number three is as you build wealth and income, find ways to give it away. The privilege of wealth is not that you have it and earned it. The privilege is that you have the ability to impact the organizations that are meaningful to you in your life, that you have a chance to sort of give. And there's a huge amounts of rewards for that. So as you build wealth, don't forget to share it. Don't forget to give it to the groups and people and help people along the way. And as you do that, I think you will find that the value of your wealth has a lot more personal meaning. And I think you will grow in wealth as well.
Awesome. Love them. So last thing is, how can our listeners get in touch with you?
Yeah. My email is simply drew.whitson@gmail.com, and maybe you can put that in the show notes. You can just Google me as well. I'm on Bethel's website, but happy to get in touch with anyone who's interested in some of the markets we talked about, interested in sort of being a passive investor. If the kinds of things that I have sort of espoused align to what your values are and maybe what your investment goals are, I'd love to talk to you about ways we could partner.
Cool. Awesome. And Drew, we've got a conference coming up in September 20 and 21st. Drew, you're going to be there, part of the conference. So if anybody wants to, check out and meet Drew there, they're definitely, we'd love to have you at the conference, and you're going to be there, and I'm excited to have you on.
Looking forward to it.
Cool. Well, I appreciate you spending time with us and adding a ton of value.
Thank you. Appreciate it, Todd.
All right. Take care. Hey, special thanks to Drew Whitson for joining us on the show, and I appreciate him giving a ton of value. Listen back and take a couple things out of this episode. Drew's also going to be a speaker at our North Star Real Estate Conference, so make sure you've signed up for that. You can meet Drew there, introduce yourself, and he's going to add a ton of value there as well. A few things I took from this episode, and a ton of stuff I really took. First of all, he talks about find ways to make money, not just for yourself, but how do you impact others? How do you impact the community you're involved in? How do you impact the neighborhoods and the tenants? And make sure you're finding ways to give back. He also talks about there's no substitute for taking action. And that's super important. We can continue to learn and grow, which is really important, but we've got to take action eventually. And quite frankly, learning and growing is taking action, but we've got to just continue to do that, continue to push on and not making excuses. And the last thing he talks about is building relationships, and very powerful. Obviously, relationships come in all kinds of forms. but building relationships, making sure you add value to others. Again, appreciate Drew. Take a couple things, take this episode and really apply it to yourself. Again, our conference, we'd love to have you there. We'd love to have you attend. It's nreconference.com. It's in the show notes, so take a look at it. nreconference.com. I'm Todd Dexhammer. I am signing off. Make every day a Saturday. Hey, thanks for listening to the show. Couple things before we go. Again, go on to our Facebook page, Pillars of Wealth. We'd love to have you on there. Go on to iTunes, give us a rating and review, and subscribe to the show. Also, don't forget, reach out to me if you want any help with potentially growing your business, and reach out to John Stiles to help you buy or sell real estate. Thanks for listening. We appreciate it. Have a fantastic the rest of the day. And as I say, make every day a Saturday.